Welcome, this is Graham Bibby here from howtotradethestockmarket.com. Today is the 23rd of July 2011, and I thought we'd do a bit of a case study on the Australian All Ordinary Index. I want to prove a few statistics and dispel a few myths about the market. So basically what we've got here is the index going back to 1985. And I just want to show that the markets move sideways as much as they move up. Here we've got a rise from 1985 to 1987, and initially we were going up this trend line, and the trend line really is just telling us about the equation of supply and demand. As the trend line gets steeper, the demand for this market, or it could be a stock or it could be a fund, is increasing, so it starts to rise more rapidly, and then when we go below the trend line, that is a signal to sell. And this was actually the period of the 1987 stock market crash. If we look across here on the right hand side, this line here is 857, and each of these lines is a movement of somewhere around 180 points. So if we take this low here, this is probably in the region of 700, and the market moved in 3 years to 2,200. That was the trebling of your money in 3 years. So what I want to show you is that performance comes in blocks, in periods, and then following those periods there can often be a period of prolonged sideways movement. So these trend lines here are called support levels. It's the level at which you expect the market to correct back to and then start rising again, so there is no change in trend. What's interesting to watch is after the initial bounce following Black Monday in the 1987 crash, the Australia All Ordinaries Index went sideways for 1, 2, 3, 4, 5 years. So 5 years of no profit if you were a buy and hold. However, if you'd invested here, locked in your 300% profit, you could have sat on the sidelines if you decided not to invest anywhere else. Of course, in How to Trade the Stock Market, we're showing you how the world is your oyster, and you can in fact invest overseas using your local broker. And then during this period there was really good profits to be made. Let's just find out what's going on with that one. Take that off. So that was your sideways movement, and then we had another little bull run here. The market rose from around 1400 to 2200 in just over a year. So that's over 50% profit in a year. And then basically we were trading sideways, new uptrend here. After that correction we broke out. The buy signal was given at just about 1850, and the market went on to rise to around 332. So that's a 1400 point movement. That's a 75% gain. But I want to show you from 98 to 2004, which is basically 6 years, the market traded sideways, and then we were off to the races again with a nice move from 2,600 to a little over 6,000. So again, we're talking profits in the region of 150%. Let's zoom back. Playing funny games today. 150% return during this time frame here. Let's turn that to weekly. During this time frame here, so we're talking about 1, 2, 3, 4, 5 years, and the markets moved from, well, we can see it more clearly now, 2,600 to 6,400, which is somewhere in the region of 150% return in 5 years, 30% per annum. And then global financial crisis happened, sell signal was given up here. In our fund optimization service, where we actually manage people's money in our other company, we lost 8%, but the market went to fall from 6,400 to 3,200, a 50% fall. Now if you'd come out with an 8% loss, then reinvested when our signal came, which was basically spot on this circle in March of 2009, you would have come out with, for every $100 invested, let's say $92, reinvested at this level of 3,200, and even if you didn't go anywhere else but here, you'd now be 4,600, which is a 1,300 point movement, which is somewhere in the region of 35%. So your 92 bucks would be 137, where other people are just holding on there. And then again, if you're trying to make money in this market in the last 18 to 20 months, let's just zoom in a bit further, from around September time to now, which is July of 2011, you've basically got 21 months of sideways moving market. So what I really wanted to indicate there is the profits come in moves. There are times when the market moves sideways, and really what you want to do is be able to focus your attention on overseas markets when your own particular market is having problems moving. So this is Graham Bibby signing off from howtotradethestockmarket.com. Please take a look at the website if you like more details. And I'm also the CEO and CIO of Richmond Asset Management, which is a Hong Kong based company that does manage money for clients and for funds. So with that, just the 23rd of July, thank you very much.